Hello, this is Wayne Hiley, Managing Director and CEO of Peninsula Energy. During this presentation, I'd like to introduce you to an ASX-listed company with US-based assets and a clear pathway to meaningful production levels of uranium. Before we start, I'm obligated to share with you this disclaimer statement and competent person statement, along with this cautionary statement with respect to inferred resources. Peninsula is an ASX-listed uranium mining company which owns the Lance projects in the mining-friendly U.S. state of Wyoming. We are embarking on the transformation initiative at Lance to change from alkaline to in-situ recovery to a low pH ISR operation. This should position us with a global industry-leading production cost structure. We are a term debt-free company with more than $10 million in cash on hand to carry us forward. And importantly, we also have a uranium sales contract book that will generate net cash margins of $6 to $8 million in calendar year 2021 and additional revenues in the future. We are directed by a seasoned and diverse board, and we employ an experienced resource development and mining team with strong production capabilities. Lance is one of the biggest U.S. uranium projects, with 56 million pounds of resource and a license to produce up to 3 million pounds per year. Now, historically, U.S. uranium projects have used alkaline ISR, but globally, low pH ISR is the leading production method. Lance is the only US-based uranium project authorized to use both low pH ISR and alkaline ISR production methods. Our feasibility studies on low pH ISR produced very positive results, with estimated stage 1 all-in sustaining costs of $41, dropping to $31 a pound for stage 2. The Lance project has modern processing and wellfield production facilities from the previous alkaline ISR production campaigns. We intend to modify those facilities for low pH ISR use. We estimate only 6 months to complete the necessary transformation work and to return to production once a decision to do so has been made. And that decision will be based on market conditions. But to be sure, we have a simple and clear pathway to production. This graphic illustrates that simple, well-defined pathway to production. Our current work program is focused on our technical optimization activities, which include an active field demonstration in an area not previously subject to alkaline extraction. The demonstration commenced in early August, and we anticipate sharing initial results before the end of this year. In parallel, we will continue to work on securing additional offtake sales agreements and on obtaining any additional funding needed to complete the production restart. It'll only take us 6 months from a decision to be in production, given the available plant facilities and established well fields on the site. A further 6 months after the initial restart, and we'll have developed new well fields, and they'll be available to ramp up our production rate to our project design capacity. Importantly, though, keep in mind, we have the agility to move with the market. If market conditions warranted, we could start that 6-month countdown now and complete the final technical optimization and study updates in parallel with the startup work. Peninsula has a clear difference over our uranium developer peers, and that difference is our established uranium sales contract portfolio. Over the coming decade, we're committed to deliver up to 5.5 million pounds of uranium to major utilities. We will receive a price of between $51 and $53 a pound for those sales. This sales commitment represents about 20% of our planned future production from the Lance project. Through strategic uranium purchases, We'll generate a net cash margin of $1.4 million for our uranium deliveries this year, 2020, and we have secured a net cash margin of between $6 and $8 million on deliveries next year, 2021. No other junior uranium company can boast of these relationships with our customers or of the cash flow generation from assured current and future sales. In the uranium market, there's been a big upheaval this year. We've witnessed significant production cuts by some of the major players. Because of this, there's a new emphasis on diversity and security of supply among the fuel buyer community. We're seeing the results of this in the uranium prices, which are now already up 27% since March of this year. Peninsula also is closely watching the developments in the U.S. market. The U.S. Department of Energy has released its strategy with strong bipartisan support to revive the capabilities of the U.S. uranium mining, milling, and conversion industries. To support this strategy, they recommend a 10-year U.S. government program to spend $150 million each year to establish a U.S. uranium stockpile. They're also recommended the long-term extension of a trade agreement with Russia and the Russian state-owned Nuclear Fuels Corporation. An extension and amendment to that agreement was now completed in early October, and it will have the effect of limiting Russian involvement in Peninsula's home markets. Peninsula is the only ASX listed uranium company that has immediate abilities to take advantage of the U.S. government buying programs. So I thank you for watching today. I think you'll agree, Peninsula presents a compelling investment case. We're debt-free and funded through calendar year 2022 with the cash in the bank and our cash flow from ongoing uranium sales. Our focus today is on restarting our Lance project to transform it into a low-cost, low-pH ISR uranium operation. That restart can happen within 6 months of our investment decision, and we can move on a decision as soon as a market signal. Finally, we're driven by a highly experienced team with a can-do attitude. Thank you again, and I'd be happy to answer any questions that you may have. Please feel free to reach out to me using the information provided here. Have a great conference.